Welcome back to another BEAM webinar. My name is Mike Albu and I look after the BEAM Exchange, our platform for information sharing, knowledge and so on about market systems development. And this space in particular, the Grab the Mic webinar, is a place where organizations can share their experiences and their lessons and their insights from work on the ground. If you want to present here, by the way, you've got an organization, you've got programmatic experience you want to share, do get in touch. We're always looking for new examples. But today I am very happy to introduce this group of speakers who are going to talk about transformation in commodity sectors and how PSD organizations catalyze change. And we have the two main speakers today are Renske Aarnoudse from IDH, Senior Program Manager, and Lindi Hlanze from Gatsby Africa, who's the Deputy Director. And their presentations are going to be complemented by two reflections from my old friend Rubaiyath Sarwar from Innovision in Bangladesh, and Jodie Thorpe from the Institute of Development Studies here in Brighton, where I am. So I think that's probably and then of course, finally, I would just like to mention that the moderation today will be done not by me, but by Dave Boselie, also from IDH, and he's going to be taking over from me in a second and giving the speakers their microphone. Anyway, thank you very much, and we'll talk later. Over to you, Dave.
Thank you very much, Mike, for the opening and introduction. Today talking about market transformation in commodity sectors and two cases in specific, cocoa and cotton, experiences by two organizations, Gatsby Africa and IDH, who have prolonged engagement in both sectors for over 10 years, sectors that are internationally traded commodities. And when we talk about transformation in that context, market transformation, those are sectors with potentially huge societal impacts, benefits if transformation were to materialize fully. Big number of smallholder farmers engaged, workers, environmental benefits in terms of water, agrochemical use, labor, deforestation. Both journeys in cotton and cocoa have been complex and uncertain. It's multi-level markets, national production systems, international trade and end markets, and a multitude of stakeholders involved, and therefore transformation requiring deep structural and relational changes, which have taken typically longer than, let's say, the regular projects that we would run in a private sector development context on working on market systems. So high risks of failures coming along together with, of course, the learnings of such journey. The context of today's session is actually both organizations have had recent reflections on their learnings of over a decade. And in the case of IDH, this was a corporate portfolio midline evaluation for our current funding cycle 21-25, which was conducted by KIT, the Royal Tropical Institute, and IDS, which is represented by one of the lead evaluators, Jodie Thorpe, today, and the report of Gatsby Africa reflecting on their journey in cotton, especially in Tanzania, again also published, and both reports are available through the link that are presented in the slides and which will be shared with the participants afterwards. We have asked the presenters not to prepare decks of slides, but rather speak openly about their learnings, and there were three sort of guiding questions for that request. What have you learned about the underlying constraints or elements that lock sectors into a undesirable status quo and prevent them from shifting forwards towards an inclusive and sustainable growth? What capacities, skills, and resources are typically required for a private sector development organization to catalyze change with regards to these underlying constraints? And what are meaningful ways to measure, monitor sector transformation, which can support, which can inform adaptive management, and meanwhile meet donor accountability needs? those were the three questions that we put forward. And I would like to invite Lindi to start off with the journey of cotton in Tanzania and Gatsby's experience there from. Lindi, the floor is yours.
Thanks, Dave. Good afternoon, everyone. It's lovely to reconnect with Dave, who used to be our head of monitoring, evaluation and learning at Gatsby before returning to IDH. So thank you for the invitation. So first, to introduce Gatsby, we're a private foundation focused on sector transformation in East Africa. We aim to promote competitive, inclusive and resilient growth through sectors. We take a systemic approach, and a bit unlike other foundations, we're a funder implementer. So we both implement sector transformation programs that are working towards a vision for a transformed sector. And we also work with the centre of government to try and drive broader structural transformation. We've worked in East Africa since the 1980s, but we started to take a sector transformation approach from the early 2000s. And the cotton programme was actually our first sector transformation programme, and it ran from 2009 to 2022. So we've just, over the last few months, gone back to look at what's happened since the closure of the programme. And to give a bit of context on the cotton sector more generally, is a major global commodity, accounts for about 25% of the fibre production that goes into the textiles industry. The major global producers are India, China, the US and Brazil. So Tanzania is the largest producer in East Africa, but it's a very small player in global terms. And in terms of price premiums for cotton, they tend to be paid for quality, which is based on staple length, and for organic cotton. Globally, the trade's dominated by large commodity trading companies, the likes of Olam and ETG, and also state-owned enterprises like the China National Cotton Group. And in Tanzania, cotton's a major cash crop, and it's grown by about 500,000 households, largely smallholder farmers in the lake zone, which is a semi-arid area. And on the processing side, it's very competitive. There are up to 80 ginning companies that operate in a given season, and about 80% of the lint is exported and the rest processed in Tanzania for textiles. And so the cotton programme had a range of interventions, but I'm going to focus on the contract farming intervention, which was really the core of our strategy in Tanzania for the discussion today. So the first question that was posed was about the underlying constraints to the system that are kind of locking it into this status quo. And so Tanzanian cotton, we felt, was in a low input, low output trap. So essentially the incentives and the risks in the system were preventing investment by ginners and farmers in production and processing. So to give you a sense, the investment per acre in production was around $7, compared to the most productive areas in West Africa were investing around $80. So it was a huge difference there. And there were a number of dynamics that we felt were driving that. So one was the very competitive ginning industry. Essentially, that meant that ginners were fighting to buy cotton, regardless of the quality. So there was no reward for quality, no incentive for improving quality. Farmers had lots of options in terms of side selling, where there were contract farming arrangements. And there was also a lack of trust between farmers, traders, with cheating on both sides. And then some of the ginning companies were actually using cotton to raise capital for other businesses. So cotton was not really the primary interest. And there was also weak government regulation, partly because some of the owners of ginneries were very politically connected, some of them politicians themselves. So it was hard to enforce regulation. And the reason that, in spite of all of this, farmers continued to grow cotton was there were three things that we felt were distinct. So one was that there was a levy on the industry that provided a package of kind of low quality seed and pesticides. So it was just enough to keep farmers producing cotton without having to invest cash up front. There was a guaranteed market for them to sell their cotton, and it was a relatively drought resistant crop in a semi-arid area. And so we felt that contract farming, we looked at what was working in similar contexts, and contract farming seemed to be the best solution. So we trialed different models of contract farming and iterated over the course of the programme. And the third model, which we described as a competitive concession model, where donors bid to make the best offer for farmers in a particular geography, and that we found to be the most effective model. And moving on to the second question around capacities, skills and resources required for these kinds of programs. The first one for Gatsby we felt was political economy analysis. So in a complex sector like this with lots of political interests, we felt it's really critical to understand the underlying incentives of actors, really understanding who's likely to lose, especially when you're trying to introduce a fundamental change to the way a sector operates. And then understanding what the obstacles might be to securing political will to drive change. So we drew on sort of local experts and tried to build that capability ourselves. The second one was really about choosing the right pioneer firms to work with. So in this case, it was the ginning companies. So which firms were really willing to put skin in the game to invest in something new. They also saw the potential to grow the pie, so they weren't protective of keeping all of the gains to themselves, and there was a willingness to share some of their lessons with the other actors in the industry. And we supported them typically by helping to buy down their risk of trying something new or sharing information with them, perhaps about innovations they weren't aware of. The third area was really marrying the learning from international experience of what's worked and then bringing that together with a deep local understanding. So we worked with experts that had a really good understanding of the political space in Tanzania as well as the agricultural sector and brought them together with experts that had worked extensively in West Africa. And then finally, we felt it's really important to build a reputation as a neutral party that's got credible expertise, but really has no investment, no interest in the sector. It gives you the ability to convene and facilitate dialogue and so on. And then on the third question, around measurement and monitoring of sector transformation, particularly where you were accountable to donors, and also need for your own benefit to check that you're on track. We recognise that GA as a funder implementer is in a slightly different position, but we do take co-funding from other donors, so we do have accountability to them as well as our core funder. And so the first thing that we try to focus on is whether we're making progress toward the vision for sector transformation that we set out to achieve. So we look for tangible signs of behaviour change. Our decisions being made in line with the new vision rather than being driven by vested interests. We actually created an institutional health index that looked at a range of things, everything from is public-private dialogue kind of being more effective at solving problems and bringing together government and the private sector effectively. Is tax that's being collected from cotton, is that being reinvested effectively into the cotton sector rather than other things? So a series of more qualitative indicators there. And we actually would have liked for this index to be owned by the industry actors themselves. We didn't reach that point, but that was the ambition. And we would aspire to that in other programs now. The next thing that we focus on is trying to monitor outcome level changes rather than outputs per se. So in this case, we looked particularly at investment per acre, which we thought indicated that the sector was moving away from this low input, low output kind of equilibrium that we were in, which should work to try and raise productivity and profitability, over production and also quality. And then we were also looking to see whether those pioneer firms that we talked about, were there copiers that were crowding in and adopting some of the similar innovations and increasing investments. Another innovation we saw, for example, was that the foundations that were laid by contract farming enabled organic cotton to expand. So there are now a group of ginning companies that are invested in organic farming, and Tanzania is now the largest producer of organic cotton in Africa. We also gather intelligence from industry actors to check that our results chain milestones are being achieved, and do sort of more periodic political economy analysis, looking at broader economic trends just to see what the emerging opportunities and challenges are. And then I think a really important point for us was to avoid overemphasis on annual and incremental targets. What we found was that it's possible to achieve things like a 10% income gain for a farmer without actually fundamentally changing the system. And we recognize that it takes several years to do this, and as Dave and Mike have said, it's higher risk, this approach. But just to summarize, really the Tanzanian sector was not transformed, we felt. We did achieve significant impact in a range of areas in places like an agro-dealer network, introducing new seed varieties that had multi-million-dollar benefits to the industry year on year. So there was huge benefit, and in fact there was huge learning for Gatsby. It was our first sector transformation program. So I will pause there, and I'm delighted to take questions later. Thank you.
Thank you, Lindi. I realized that I pulled up the summary slide a bit late in your presentation. It's the slide that is up now that basically concludes some of the learnings in that journey. Let me go on and pass the word to Renske to present us the cocoa experience of IDH.
Thank you, Dave. Thanks for having me. I'm Renske Aarnoudse, Senior Program Manager in IDH's Cocoa Program. It's a pleasure here to share more from actually a broad team who is together driving change in the cocoa sector. IDH's mission is to transform agricultural markets, and we do so by convening, co-designing and co-investing with private and public partners. IDH has a track record of 15 years across a dozen of sectors, and so throughout a wide range of countries and geographies. But today I will focus indeed on our work in the cocoa sector, in particular in West and Central Africa. So as you may know, cocoa grows best in quite specific temperature and rainfall conditions, and that means that you will find it within 20 degrees in latitude away from the equator. So also including West and Central Africa. And cocoa is a smallholder crop. So in West and Central Africa, well over 2.5 million cocoa farmers, each on average producing on just a few hectares, produce 70% of the world's cocoa supply. Contrasting this large number of farmers is the low number of cocoa suppliers and chocolate brands. It's just a handful of companies that handle most of the cocoa traded worldwide. This actually, together with the prominent role of cocoa authorities in the Ivorian and Guinean regulated cocoa market, makes that the cocoa sector is characterized by a high concentration of power. Cocoa and actually the end product chocolate that some of you may know better. So the cocoa sector has been working on sustainability challenges for over 2 decades. And the focus in approaches has evolved over time, right? So where 2 decades ago in the early 2000s, companies started working individually, specifically also on certification to address child labor. It moved then actually to investments in productivity package. And today we see a sector where there are sector-wide commitments on halting deforestation and living income. So let me tell you more about IDH's work in the cocoa sector on living income in specific. So we will share insights from our work, and these are also reflected in the cocoa case study as part of the IDH corporate midline evaluation, which Dave also mentioned, and of which you find also a link indeed in the chat. So in the recent year, IDH, we've been contributing to closing the living income gap in the cocoa sector based on various pillars. So, for example, the convening of the Dutch and Belgian Initiative for Sustainable Cocoa, Disco and Beyond Chocolate. And in these platforms, we're pushing sector-wide commitments and also working on the monitoring of these commitments. We're also building direct partnership with companies to collect and share insights on effective interventions to close the living income gap. we convene across sectors, so actually also bringing not only cocoa industry, but also others to promote the living income roadmap and a smart mix of interventions to come to the living income. And in cocoa in specific, we actually also bring price prominently to the agenda. And lastly, we are also supporting public-private partnership across countries, across geographies to address bottlenecks to come to a higher and stable farm gate price. So what have we learned about the underlying factors that lock the sector into its status quo and preventing it from that true shift towards inclusive and sustainable growth? It has been extremely exclusive, the focus on farmers and the farm plots as the location where change needs to happen and to ensure that a sustainable cocoa value chain comes about. And as the sector and as IDH, we have been able to change the mindset and bring the realization that more is needed than that productivity increase on the farmer's plot. We're promoting a smart mix of intervention, including ways to influence price, and in terms of both the height and also the stability of price. And citing the study, it also states that IDH has facilitated new relationships in the sector through connecting public and private and civil society stakeholders in the ISCOs, so these European platforms, through building trust between value chain actors on challenging issues, and through bringing procurement professionals into sustainability dialogue. And what we see that there are two trends that are remarkable and illustrate this change in the mental model of the sector. First, the sector, as I mentioned, now looks beyond the farmer and their plots for solutions, and more actors along the value chain assume responsibility. We are no longer only discussing sustainable production and sustainable supply, but also sustainable market demand. So concretely, responsible procurement now features prominently in the sector dialogues, and companies are figuring out how to integrate this into their business. The distance between the trade desk and the sustainability department seems to be finally reducing, and there's an ongoing exploration on how to better distribute price and risk and benefits along the value chain. And secondly, another trend that we see is that governments are taking a stronger lead in pushing the sustainability in global value chains. So voluntary commitments were for a long time driving the agenda, but the influence of legislation and public policy instruments is becoming more and more prominent. So you may think of the EU deforestation regulation, the CSDDD on so broader due diligence. And in cocoa, we also see the African Regional Standard for Sustainable Cocoa, also known as the ARS 1000. So to catalyze change among private sector, well, the key capacities and skills that are needed, it's actually a deep understanding of that commercial dynamic, right, that needs to be addressed so that we can focus on the real discussion, right? So as mentioned, a mindset has started shifting, and it opens doors to address the underlying constraints, to develop that business case of fully embedded sustainability, including how to come to higher prices, and to embed that into the trade practices. And in the recent year, we see that the commercial agenda and business cases are effectively influenced by public policy. So if I'm allowed to cite the evaluation again, right, we realize that the stronger focus on public policy can create incentives for transformation changes beyond the frontrunners and followers. So with those latest developments, we should obviously still continue to ask the question on, do we now have the right cocktail of interventions, and do we believe that we're on the right track, and how do we continue to meaningfully measure and monitor sector transformation so that we can also adapt and be accountable. So around living income in cocoa, I think it's important to see that there is a strong alignment ongoing on measuring the actual living income and the closing of the living income gap. So to cite the example of the CHIS methodology, the Cocoa Household Income Study methodology, and also right now a cocoa income inventory coming about. And similarly, there's also a lot of work ongoing on harmonizing the sector's living income targets and way of monitoring that process through, for example, the collaboration of the European Initiative for Sustainable Cocoa, also known as the earlier mentioned ISCO. So this should strengthen accountability within the sector and should build trust among the players in the system. And maybe just to also link to some of the elements that Lindi mentioned, right? For something as complex as sector change, a key catalyzer is something as complex as trust. So while looking at these different elements, if you allow me, I will close with also an invitation to all of you, right, to think along on how to manage and measure this element of trust as yet a complex but instrumental element to bring about the so dearly needed change. Thank you very much, and looking forward to the discussion.
Thank you very much, Renske. I would now like to give the floor to two of our referents to have a first reflection on both contributions. May I give the word to Rubaiyath?
Thank you, Dave. Thank you to Lindi and Renske. Quite a lot to unpack, but I believe those who are listening can quite relate to their context in their individual projects. A few important points that are coming out, and I believe that are common in both the presentation, is that the public-private mix, that these are not essentially private sector-driven interventions. How do we use the public instruments to incentivize the private sector? So that is coming up very clearly. I think in both the cases, we're talking about, in case of cocoa, living income increase, in case of coffee, cotton. So we're talking about the transformation from low input to low output. And in that context, we need to think of the trade-offs for the value chain actors. I would explain what I mean by trade-offs. And then also, finally, I think what we are talking about here are global value chains, and therefore we need to think of how the value shifts from the global value chain actors to the local value chain actors. So a big point that I often talk about here is that show me the money. So that's where it comes from, right? So for the farmers, for each of the value chain actors, for the transformation, they need to, let's say, have hard cash. It's transactional from whatever change that they intend to make. So, and in case of global value chain, it's coming from the buyers. It would have been great to hear a little bit more from Lindi's case, how the the buyers of the cotton are being engaged, because 80%, I think, is exported. So, so the buyers, if they're, and as we have heard, Tanzania is a price taker, it's not a price setter. For the buyers, there are other options. So if there are other options for them, then how much they're interested to invest in, say, for instance, in Tanzania. So if the buyers are not investing, then let's say, who else have the incentive in the local market to support that transformation? So we're talking about the ginning industry. Now, the ginning industry, as we have heard, they are using their industry to take finance for other things, which means they have deliberate options. We have also understood the political economy, which is corrupted, and we have understood that they have, there are many, let's say, ginning companies. So the farmers really do not have incentives because they can sell. So which means the ginning companies are competing to buy whatever they have because they have capacities and they need to utilize the capacities. So why there are too many ginning companies? Maybe because they have taken the license, or maybe because they have other vested interest, because the governance system is not right. So that clearly then indicates that the public sector has a strong hand in however the private sector would be responding. So in such a case, we often ask how the programs should utilize the government interventions for, let's say, the transformation that we're looking for. It could be by providing trade incentives. It could be by attracting FDIs. It could be by asking the buyers to actively invest in changes, giving something to them so that they invest in return, because it's a cash crop and it's part of the growth perspective. Now, in terms of trade-offs, let's say, what often we miss is that the farmers, even though it's a cash crop, they're just not engaging in one crop. they have multiple engagement in multiple different value chains. So when we are promoting certain interventions, it's a cost to them. Now, if it is not translating to value and return for them, what happens is that their ability to adapt it becomes slow, because they're always maximizing their profit and thinking of what is my opportunity cost. So if they have opportunity cost, they would be very slow in adapting it, because maybe they have, I mean, they're more invested in cattle, I don't know. So we need to understand the totality, because in most of the cases, the poor farmers, they just don't have one, let's say, income generation activity or one cash crop. They're engaged in multiple crops. But since the project is engaged in one crop, it often becomes, let's say, myopic, that we are only thinking of that crop. So how the other crops are, let's say, influencing the trade-off. And that trade-off is not only in the local value chain, that trade-off is across the value chain, and it's also in the global value chain. So we need to understand that very well. And I think the final point is, as I said, so the value, it needs to translate to hard cash. And therefore, we need to understand, okay, what is or who should be my entry point or anchor point? Should it be the private sector, or should we start with the government first? Should we, I mean, let's say, create the instruments first? So I think, I mean, there we had heard some sort of, I mean, let's say, suggestions from Renske's case, where she was talking about the public policy instruments. She was talking about actively working with the public-private partnership and civil society and the global value chains. So, and ways to influence price. Now, that's critical, because it's not only about price, it's also about cost. In my practice, when I'm supporting projects, I try to look at two dynamics. A, either the cost is constant, my price is increasing, therefore the profit is increasing. Or B, the price is constant, my cost of production is reducing, and therefore I'm having profit. So for me, it's very important to see that the actors in the value chain, they're immediately seeing that return. If they don't see that return out of the changes that are happening, it becomes very slow, and the opportunity cost and etc. I mean, triggers. So finally, the point is, let's say it has to, like Renske was also saying, it's a sustainable change. It has to be sector-wide. It has to be value chain-wide. It has to be, it also has to, like we famously say these days, I mean, in the interconnected market systems. But then for living income to change, so that's also a very complex issue, because it is also, let's say, as per my understanding, it's also influenced by the food prices, the overall, let's say, inflationary status, and etc., access to resources. So even if the project is delivering, let's say, on cocoa, the living income change might be poor. So you are an M&E specialist, Dave, so I believe you would understand this nexus quite well. So, but I think, I mean, a lot to unpack here. I'm given 5 minutes. I would stop probably there. And if I have more time for reflection, I'll come back for sure. Thank you.
Thank you very much, Rubaiyath. Before giving the word to the presenters, I would like to add the questions, reflections of Jodie, so that we can jointly respond to them once we've collected both. Jodie, the floor is yours.
Thanks very much, Dave. My reflections are obviously influenced by the midline evaluation that's been referred to. IDS, in partnership with KIT, the Royal Tropical Institute in Amsterdam, has recently completed that evaluation. And as has been mentioned, it included several case studies, including looking at work in the cocoa sector related to living income. Across all of the evaluation, we find that IDH's strategy has been evolving over years that they've been operating. What has always been core to it has been influencing major companies that dominate the trade of key commodities. So that has remained constant, but learning has led to evolution in other aspects of the strategy. We find successes in convening work, in sector governance work, and in some implementation of some innovative business models, where overall the biggest challenges lie is the sort of deep business practice changes, some of the type of which Renske talked about with respect to cocoa. And that's particularly a challenge in global commodity sectors. IDH has a number of different types of programs, but a sector or a section of it looks at global commodities, and here's where some of the challenges around business practice lie. If I step back from the evaluation then and try to reflect on the presentations, I think what I heard is that both speakers talk about trying to solve problems of farmer income and productivity through working at different levels of the system. So away from the farm, trying to influence cotton ginners, cocoa traders, or brands. Both are working with front-runner companies. As I said, that's core IDH strategy. For Gatsby, I think there's more tradition of working with governments, but still in what Lindi talked about, working with front-runners was key. If I reflect more specifically on what comes through the evaluation related to the cocoa work, again, there was a trajectory and an evolution in IDH's strategy. And over that time, there were changes. We've seen changes in terms of more effective communication, raising awareness around living income gaps, contributing to an acceptance that price needs to be on the table. It needs to be part of the discussion. Renske referred to that, and I think that was a change that would have been inconceivable some years ago. And IDH played a role. It wasn't the only actor creating that, but played a role in contributing to it. And business has made commitments to change practices, and IDH is offering tools, data, and insights to support that. However, I think still at this stage, if we look at the fact that at least 3/4 of cocoa farmers in major producing countries still are failing to reach a living income, we cannot conclude that market transformation has happened. If I look at Gatsby's experience with cocoa, that there was also challenges to really transform that market, transform that system, and it led to a closure of the program. Although I think subsequently there have been some indications, some sort of positive signs through the ex-post evaluation that some change is happening. So I think with respect to cocoa, we could also say it's an issue of time. But also just saying we need patience, I think, is unsatisfactory. So this leads me to three sort of kind of key questions or key points I'd like to make. One, are we collectively as private sector development or market systems practitioners investing enough in strategies or theories of change that are informed by understanding of what real levers of transformational change is? In the evaluation, we use the Water Systems Change Framework that was published by Kanya, Kramer, and Sengi, and it groups change into the levers of transformational change into 6 categories at 3 different levels. Structural, which refer to changes in resources, policies, and practices. Relational, including power dynamics and the sort of trust issues that both speakers mentioned, and mental models. And I think collectively, we're not bad at diagnosing and acting on structural levers of change. But in cocoa, for example, it's the market and political power of large companies, which enables them to create and capture value, but which sits in tension with the sort of changes that we're trying to see, the sustainable and equitable changes, and with the sort of issues of trust that have also been mentioned. Secondly, do we have the right skills and capacities to work on these broader levers of change? And I thought it was interesting to hear from Gatsby how investment in political economy analysis has increased over time as they took learning and through the experiences in cotton. And finally, with respect to measurement, I think this is critical. I found it amazing in a way during the evaluation we conducted just how much data was being tracked, not only by IDH, but also by the front-runner companies that IDH is working with and who we interviewed. And in the evaluation, we recommend that IDH adopts a more streamlined set of indicators, of KPIs, that are less about quantifying outputs or even outcomes, but more about indicators of systems change and how you track whether change might be happening. And I think, again, Gatsby's approach is interesting here. So identifying in advance the sort of behavioral changes you would expect to see if the system is transforming, hypotheses sort of, and then tracking whether that change is happening. I think also the point about avoiding overemphasis on annual changes and looking at the bigger picture. But as Lindi recognized, Gatsby does have the advantage of controlling much of their own funding, even if not all of it. So, in the case of IDH, the expectations of core donors become much more important. So I think the question is, how do we collectively get funders to be asking better questions of the sort of private sector development agencies that they support? That's it, Dave.
Thank you very much, Jodie. Yeah, a rich set of reflections, questions. I want to pull out a few before I give the word to Renske and Lindi. I think common ground in terms of what are the trade-offs of value chain actors? What are the motivational aspects to bring or to accept and adapt behavioral changes by the various value chain actors? The importance of the political economy. We all emphasize the fact that we are private sector development agencies, but government's role and incentives are apparent in both commodity sectors, internationally traded, and how to use those roles and incentives optimally. A question on the anchor points, the entry points, the levers of change. Where in the cocoa system does this, let's say, the entry point lie where you can bring about most change with the limited resources that we bring to the table? Something not mentioned, but I think, honestly, I sometimes wonder whether we are trying to transform massive, large sectors with so small amounts of resources. Is that realistic? But so where to intervene in a way that then transformation is likely to happen, the levers of change. And the challenge to, let's say, to bring about deeper changes in business practices. I saw a Q&A question on who are the actors who are really interested in transformative change. So what will motivate companies to go deeper in the adjustment of their business practice rather than the sort of incremental steps towards further improvement? Maybe in the order of presentation, Lindi, would you mind to give your first reflection on what has been brought forward?
Thank you, Dave, and thanks so much to Rubaiyath and Jodie for really interesting reflections. There's so much to say, of course. I think I would start by saying that for Gatsby, we really focused on trying to adapt our programs over time, kind of assessing how things were working towards achieving this sector vision that we set out. So we felt it was really important to work with businesses. For Gatsby, we feel that the private sector is going to be the driver of growth. So we wanted to work with some of these pioneer firms, but we also felt in the context of cotton, it really needed effective government regulation. So we worked very closely with the public sector as well, particularly the Tanzanian Cotton Board, which is the regulator. So with contract farming, it was really important for government to enforce things like licensing, to prevent side marketing, and as I mentioned, creating the right conditions for incentivizing increased investment by ginners. And then in terms of the ginning side, so it's interestingly to your question, Rubaiyath, the industry has shrunk. There are fewer ginners typically operating in a given set season now, and that's partly because of the contract farming arrangements, which has by design pushed out some of the ginners. So we knew there would be losers because the competitive concession model means that the ginners that are willing to invest and those that are willing to invest more are the ones that secure these concessions and push the others out. So organic cotton has been a really interesting example there, where, and there's growing demand to your point about global value chains, the brands are driving, those that are making garments, they're driving demand for organic cotton for their marketing purposes. That originally, in the earlier days of the program, there were no real premiums for organic cotton. And actually, we were seeing that when farmers were adopting, they were often having lower yields when they stopped using pesticides and they transitioned to new practices. So it really wasn't viable financially for farmers. They were worse off. But actually, that started to shift now that the premiums for organic cotton have started to increase. And that's crowded in a group of ginners. And they're seeing a return on their investment because they're now supplying seed, biopesticides, mechanized farming services. They've expanded their own extension provision. The extension is really critical to make sure that the better practices are adopted and farmers get these higher yields and drive their profitability. But we're starting to see that happen, and ginners kind of increasingly investing more. So in terms of anchoring the program, I think fundamentally they were the two partners that we thought were most important. There are the organic certification organizations, and they work closely with brands. So they're active. They're Better Cotton and Cotton Made in Africa are the two major ones. The cooperatives were kind of mandated around 2017, 2018. But actually, when we went back and looked at it now, only about 30% of farmers are formally members of cooperatives, and they have a lot of capacity constraints. So we never felt that they were the right player to anchor the interventions with in the value chain. And in terms of just coming back to your points on the global value chain, we always were trying to emphasize that we need to focus on productivity rather than price. To your point that Tanzania is a price taker, we can never influence the global commodity price. What we could influence is how productive farmers were, and that's where we could try and get the productivity gains. And these premiums are a kind of additional benefit, but we still believe at the core that addressing productivity is the issue. And I think for farmers, in terms of them looking at their optimal crop mix and other activities, we're not suggesting that farmers should be growing cotton if it's not viable for them. And it probably means overall for cotton that there will be fewer cotton growers, but the ones that are doing it will be more productive. And that could still lead to overall production growth in Tanzania. There's lots more that I could say, but I think I'll pause there because I know there are questions. So thanks, and back to Dave or Renske. Thanks.
Sorry, I was muted. Yeah, I see your hand up. You probably want to react immediately upon.
With your permission, Lindi. I think you spoke about arid lands in this context, and since you spoke about just now that productivity gains is what you're looking at. How about the land system? Because I was recently in Tanzania working on another project. So and the arid land system irrigation, those came up too. So my question to you is, how do you see the effect of land system, or did you have any intervention there?
And so no, we didn't have. I suppose what's unique about Tanzania is typically farmers have larger, compared to the rest of East Africa where we work, Tanzanian farmers, even in the lake zone, tend to have slightly larger farms. So they're probably in the sort of 5 to 15 acre in total would be the kind of average for farmers. So it means that there's more incentive for kind of extensive farming models where they can just, maybe they plant 3 acres to cotton and they broadcast their seed and don't invest heavily. And then they do invest heavily in an acre where they're doing horticulture, maybe irrigating. But they can be, in a way, it distorts incentives a bit because they're, where you've got much more of a land scarcity, you have to make really hard decisions. And so I suppose that would be, we didn't intervene around sort of land tenure arrangements, but I guess that would be the one thing I'd mention about Tanzania. Thanks.
Thank you. May I move on to Renske to reflect on the questions, remarks made?
Yes, indeed, quite a choice to what to zoom in on, right? But maybe just to also focus a little bit on, I think, that question also on like who are really interested in that structural change, and building on what Rubaiyath said, I think we shouldn't underestimate that farmers, right, and are key and also have a very strong interest in that structural change. And it's not because there's unwillingness or a lack of ability to make a shift that it's not happening. It is because as it stands now, it's not rewarding, right? So I think that comes to that point of, okay, how is indeed the value redistributed so that it can push change, right? And that is where I think the point was made also on that shift that is now happening, right? That there's that realization on it. It is not only about what happens on the farm or by farmers, but still, right? And they are in the end also key drivers for change to make it happen. So, and I think there also it is then further down the value chain, identifying who are the players to pick up on and to make it happen, and how do you get to that point that you actually have the critical mass together. I think it is, at least in the cocoa sector now, very much a time of also making sure that there is going to be more alignment around how investments are made, right? It's quite well understood what needs to be done. It also needs to come to, so what is that entry point? That entry point is the collective, right? And I think there are sufficient actors in the value chain to make it happen, that they see that change is needed. And I think the role of the public sector, both in origin countries as well, actually on the consumer side, on the market side, are key to push that, right? And to continue pushing that also beyond those first movers in scaling investment. So I think I just wanted to also emphasize a little bit that role of farmers and like their representation and organizations as real interested in the structural change, right? And the necessity to enable that through aligned investment moving forward.
Thank you, Renske. I would like to combine two questions that were raised by Abdur and Iteke in the Q&A, which basically speak to the relationship and change in relationship in both sectors, cocoa and cotton, and the extent to which, let's say, the local voice, the farmer's voice, or local communities are represented in this process, in this dialogue. We often speak about farmers, we don't speak so often with them, and that was partially maybe also a reflection in our midterm evaluation. Is there sufficient engagement of farmers, local communities, and overall relationship changes? Have we observed them in this process of transformation? Maybe Lindi first, before I go to Renske.
Dave, so I think there's been really interesting experience around contract farming, and yeah, to Jodie's point, this competitive concession model, which was really abandoned by ginners when the cooperatives were enforced because the risks were too high with these newly formed entities. But we've actually seen last season that this model has been reintroduced by the industry actors themselves. So our sense was that there's been, there was value in that model for all the different players, and there were greater levels of trust. And I think what was really important there was local government playing a kind of mediation role between farmers and ginners, and ensuring that farmers' interests were well represented, and that they really created the incentives for ginners to, make the best offer to farmers. I think so there are, isolated cases where it's really improved, but there are also challenges. So public-private dialogue was, these stakeholder dialogue fora were very politicized. And so we felt actually they weren't really working toward building that kind of trust and improving the relationships. There was a farmers association, which was very weak. So that was quite challenging. So that's where we feel like local government in a way has stepped in and helped to represent the voice of farmers, in some cases through the cooperatives, where they represent farmers. But yeah, lots of challenges. Jodie, over to you.
I wondered my hand up, but I wondered if Renske wanted to come in first. Otherwise, I'm happy to chip in.
Yes, well, on the same topic, yes, I think maybe two elements. One, in a different way than what Lindi has been describing, right? But I think a point of where we're moving also in the cocoa sector is that the contracting terms change, right? And actually are shifting a bit of that balance or that power balance, and as such should also further empower or bring actually the farmer voice closer into the dialogue, but also into the negotiations actually. And I think but it's a bit of a chicken egg, right? Like when farmers don't have the ability to actually go beyond, like actually trying to make a living income, right? There's also it's almost a luxury of really like having that full negotiation power and so on and so forth. And I think here we see that over the last years, civil society in the cocoa sector has been instrumental, right, in actually tabling these issues, representation of the other voices in the value chain. So I think that means that this chicken egg dilemma, so to say, or this vicious circle of the power imbalance is slowly starting to shift, or at least there's the potential to make that happen. Jodie.
Yeah, I'll just chip in really quickly. It was sparked by some of Lindy's observations initially, and some other work that we've been involved in looking at contract farming and really the issues of trust and the issues of the power of the farmers within those contract farming relationships, and how to create the structures that ensure the interests of farmers. Partly that can be related to government, partly that is about the producer organizations themselves, and there's probably a longer story behind that there's not time to go into today, but really that they are there to represent the farmers and not to represent the interests of the contract farming arrangement. Which, just to go back to some of the other questions, I think the point about which market actors are interested in the sort of changes in cocoa, I think there are several actors that are interested in it, from industry as well as from government and from farmers' organizations themselves. And it's this question of how do you create the conditions for collective action? And I think that's partly what the relational drivers or the relational levers of systems change are about. And the sort of relational changes to come to that question that we observed in the evaluation, there were several. There were changes that Renske's already mentioned within businesses, between the sustainability desk and the trade desk. There were new relationships within the value chain between different businesses at different levels of the value chain. And there were new public-private relationships that were convened. What was missing that Dave had sort of pointed to is the relationship with the farmer, that the Southern voices, they were relatively weak in looking at those changes in dynamics.
Yeah, I see time is against us as always, and I see Mike's hands up. Before handing over to Mike, I definitely first want to thank both Mike and Isabel for giving us the opportunity to have this discussion. We already observed upfront that this could be a discussion for much more than an hour, and we're happy to continue that conversation, but maybe outside the scope of the Beam exchange session of today, and it might need to follow up in different modalities. Mike, may I give you the word, and thanks a lot for the opportunity.
Thank you, Dave, for giving me a rest from playing that role. I know is quite stressful. Yeah, we are out of time. So the most important thing I wanted to say very quickly is, please can you fill out the short feedback form that we have, which a link to which is in the chat right now. Thank you, Isabel, just to give us some feedback. Thank you. So the second thing I want to say is thank you very much to all five of you for what's been a very interesting conversation, and one which I'm sure we could continue for quite a long time. Unfortunately, we don't have that time right now. I had my own question, which I will have to bring up privately with Jodie. But yes, it feels to me like this is such an important topic. I mean, in the sense of what is the ambition that an organization like IDH or many other organizations should adopt in this kind of, under these conditions that we're working in? What is an appropriate kind of strategic ambition? How do you distinguish between, if you like, your aspirational ambitions and targets and your operational ambitions and targets, which I think is one of the points that is made in the recommendations of the IDH midterm review. Please do read those two reports. They're both really interesting. They both have very good short summaries at the beginning, so you don't need to read the whole thing, although I recommend reading the whole thing, because that's, I think, when we can really get into some really constructive conversations. So yeah, sorry to have to wrap everything up. Really enjoyed it, and thank you very much, Lindi and Renske, for presenting the work in these two contexts. And thank you, Rubaiyath and Jodie, for responding. And thank you, Dave, for doing my job. And yeah, please come back next time for the next BEAM webinar.